Good afternoon, everyone. Today I'm chatting with Trent Mell from Electra Battery Metals. Guys, I find this story really intriguing because there are lots of stories in the battery metals world where we got companies that are just putting drills into the ground or going around and taking channel samples, spending tremendous amounts of money on digital marketing and investor relations. And you don't really see that much of a differentiator between what they're doing and ultimately what role they're going to serve in the electrification of vehicles. However, when it comes to Electra Battery Metals, they've taken an approach where they're getting into the refining of cobalt. In fact, their goal is to be the first cobalt refiner in North America. Now, 2022 and 2023 were a rough couple of years for Electra as they're trying to raise the capital in order to get their plant fully operational. They've got the price of cobalt, which has been struggling since it hit its highs in 2022. And then we have the Canadian junior markets where there seems to have been a bit of an exodus from retail investors. That being said, Trent has a really positive outlook for 2024, and we get into that. All right, everybody, enjoy the interview. Trent, thanks so much for joining us today.
Thanks for having me, Steve.
So, Trent, this is the first time we've had you on. I had a lot of fun just going through all the different coverage you've gotten from the mainstream media in your story. I think that it's really an interesting story in the Canadian junior markets where we see so many copycat deals and we see companies that don't really have that much exciting stuff happening and they're just trying to, catch the tailwinds of a popular sector. But I see what you guys are doing, and to me, it sounds really, really interesting. So let's start off with maybe a little bit of an overview of what you guys do, so that our audience who's new to the story can kind of get up to speed.
Thank you. Yeah, appreciate the endorsement, because you're right. There are thousands, literally thousands of I call them PowerPoint companies with ideas, and and you got to see how these small caps evolve. And for ours, we do go back 6 years. Initially, we were called First Cobalt. So the narrative, the thematic really of putting this company together hasn't changed. Back then, we saw the EV revolution coming. I mean, I think it's well underway now. But we thought, geez, look at cobalt that it tied up in the DRC and processed in China. What can we do to onshore the North American supply chain, at least on that commodity? And before too long, we got our hands on a refinery, and this type of refinery capable of taking minerals and converting them into a battery grade form so that you can include them in a lithium-ion battery, pretty unique in North America. And so the company, we divested of most of our mineral properties. We acquired a refinery, and we've been working on that for the last 3 years now. Construction well underway. Permits are in place to start, at least still with cobalt, with the one and only battery grade cobalt refiner for the continent.
You guys are planning to do cobalt refining. My understanding is that you guys also do lithium-ion battery recycling, and eventually down the road, there's plans to get into nickel processing. Is that right?
Yeah, that's right. So when you get through a mine and a mill, you got to do something with the recovered minerals. And in North America, most of that material will go to a smelter first, and then to a refinery, and those metals then go into the alloy market, stainless steel or jet engines and what have you. For the OEMs, the batteries that we're making, we need this in a chemical form or a salt form. And so on the cathode side, it's nickel, cobalt, and manganese. And so our flow sheet, our hydrometallurgical refinery, is capable of processing all three types of materials, as well as, you said, the recycling of black mass. So once you end-of-life battery or a lot of battery scrap that is going to be generated over the coming years in North America, you crush that and you can recover not just nickel, cobalt, and manganese, but also lithium and graphite.
So maybe you can help me understand a little bit what's happening in the cobalt market right now. I'm sure you're following it, given everything that you've built out. It's probably something that I imagine you're following actively. Cobalt has come down quite a bit from its 2022 highs. What can you tell me about what's happening in the cobalt market? I mean, for myself, as somebody who's just kind of, looking at it high level, it seems like the price of cobalt shouldn't be down over 60%. Is it not needed in future cars?
Yeah.
What am I missing here?
Cobalt. So when you look at battery materials, and your investors that are maybe active in the mining side probably look at nickel, copper, and lithium, right? Those are kind of the headline metals. Graphite, cobalt doesn't quite get the same love. They're, both are needed. We went through a period, I want to go back to 2018, when cobalt went from $15 a pound to 50. And then at that point, the Teslas and LGs of the world were saying, well, geez, we got to engineer cobalt out of the battery because it's expensive. And a lot of it's coming from questionable sources in Africa. So fast forward, normalized cobalt price is probably, 20, $25, maybe $30 a pound. Today, we're sitting at under 13. And so like every commodity, and frankly, it's across the board today, nickel, lithium, and are in the same boat. We're at a cyclical low for cobalt. Part of that's driven by sentiment. Part of that's driven by some destocking that happens in China at the end of every year. So we'll see that maybe bounce back a little bit as we head into Chinese New Year. But part of it is just new supply coming on stream. So there are just supply and demand imbalances. We had a bit of a supply shock with new mines coming online in the DRC and production that was trapped due to a tax dispute now coming out. So that'll stabilize. For what we do, doesn't really matter. We're an intermediate. We buy cobalt, we sell cobalt, so we don't face that market exposure. But certainly as a miner, you got to get used to the ups and downs and make hay when it rains.
Where is most of the cobalt coming from that you guys would be processing? Is that from Ontario, or is it where's it coming from?
Yeah, so when you look at the life cycle to explore, discover mineral deposits and bring them into production, you hear anecdotally kind of 7 to 15 years. I call it 8 to 10 years to build a mine. So North America, we don't have a lot of cobalt today being produced. What is produced is a byproduct of nickel operations. So you look to Sudbury, look up to Newfoundland as well, to Boise's Bay. We've got an asset in Idaho, very prospective, but it's years away from production. And so most of the world's production for cobalt that goes into batteries emanates from the DRC. And it's what we call the African Copper Belt. There are 5 or 6 world-class operations. You've got the overhang of, okay, gee, it's Africa and it's the DRC. You've got smaller mines that have artisanal operations. And so in sourcing cobalt, you've got to know your counterparty and do your supply chain diligence. But as a whole, whether you're Apple or GM, you're getting your cobalt out of the DRC if it's going into a battery. And so the part of the supply chain that we're solving is the China angle, because once it's mined in the DRC, 80% of refined cobalt batteries is China controlled. And so we're trying to eliminate that part of the supply chain by taking African cobalt and skipping China and bringing it straight to North America to address that part of economic and national security for America.
So the plan is for you guys to effectively work with other mining companies to get the ore, and then you guys will process it. Now, do you guys process it to like a concentrate, or does it get fully processed into like a cobalt powder? What does that look like?
Yeah, I should have it on my desk here, but effectively we're receiving the equivalent of a concentrate. It's a hydroxide product. Cobalt hydroxide is its name, and we're making it into a cobalt sulfate, which is the final. It's a pink powder product that would then go to the precursor manufacturer. So if you want to look at your supply chain from mine to a car, you got to mine it, and you put it through a mill. Then it would come to us for refining, and then it would go into the precursor manufacturer and the cathode manufacturer. They work hand in hand, and then finally into the battery before going in the vehicle. So we're that second step. We truly are the connector between future North American mines and future North American battery plants. We're that, we call it the midstream of the supply chain.
Okay, so you guys have been dealing with a bit of a tough market here in the last couple of years, 2022, 2023, where especially in terms of volume. Now, I know you guys aren't listed on one of the Canadian junior exchanges, or I don't think you are. You guys are NASDAQ listed, correct?
We're dual, yeah. We're actually NASDAQ as well as the venture. We're on the TSXV.
Oh, okay. So you guys do have a junior listing.
Yeah.
So we've got the Canadian junior markets, at least. It's been a rough couple of years. I know you guys need to raise a bit of money to get your facility out to where you ultimately want it to be. Yeah. In addition to that, you guys have some convertible debt that could eventually turn into a problem. What's the plan to go and get the final capital you need? And how much of a problem do you think those convertibles are right now?
Converts have been very supportive, but I'll go back to the cap structure because, yeah, I've been in the capital markets and mostly in mining for the better part of 20 years. And you're right, Steve, the Canadian equity markets are a tough place to be if you're a junior. Aussie issuers have had a better time of it. over the last couple of years. And so when I look at how we finance completion, it can't be the equity markets. That's not going to be a realistic solution. What we have right now is an asset. If I look at what we have there today, the existing facility and infrastructures and all the money we put in for permitting and equipment, it's about a $200 million US asset today. We need about 60 million more to complete it. So 23% or whatever to go on the total build for an asset that'll be worth more than $250 million, $250 million USD. Solution, well, we've seen $360 billion of funding being made available in the US through the IRA. In Canada, we've got the Strategic Innovation Fund. Provincially, there are a number of less formal programs available. And I think what governments around the world recognize, if I could call it kind of US and its allies, is that this is not a free market, laissez-faire economy that we're in with regards to rebuilding a new supply chain. We're competing against China, where cost of capital is effectively zero. We, Electra, think we can compete on an operating basis. We can go toe-to-toe with them and produce a much cleaner product, but we can't compete on cost of capital. And so now that we've seen those cornerstone investments in Canada by our government in Stellantis and Volkswagen and Umicore and Northvolt, and now there's rumors of Honda coming, I think the attention is starting to shift from policymakers away from the big downstream anchor tenants at money coming into how do we now unlock the upstream, so the refiners as well as the mining assets. And so between that and the critical mineral roundtables that the US has with partners around the world, our solution that I'm actively working on, I would say will not be equity led. It's going to be a combination of sort of government programs with private money. So think of downstream partners, sort of OEM battery makers and metals traders. And I won't say too much, but I will say, and I said this on our last quarterly call, I feel better about our funding prospects today than I have in about a year's time. It was a tough year with inflation and cost overruns for us and the entire continent. But I do see a path to complete. The timing is somewhat out of my control, but I have a very reasonable degree of confidence that we're going to get there.
Now, but before we went on air, we were chatting a little bit, and you said that you think that 2024 is going to be a pretty exciting year for the company, and that you kind of feel like maybe I'm putting words in your mouth a little bit, but that the tide's turning a little bit in terms of the capital markets. Yeah. What makes you optimistic about 2024?
Well, I think it's just, that's kind of the time has come, right? We've got, I believe, 36 or 37 announced battery plants that are being built in North America. They won't all happen, but even if half of them happen, we're going to need 2 or 3 refiners like the one we're building by 2030 or sooner, frankly, 2028, in order to meet that demand. We've already sold, we've got a contract with LG for 80% of our production for the first 5 years. And the remaining 20% has been bid and outbid kind of 3 to 1. Before Christmas, the US administration put out guidelines that says if you want the US vehicle credit, $7,500 vehicle credit, you can't be buying components from foreign entities of concern, i.e. Russia, China. And that would include foreign assets where even 25% was Chinese owned. And so the rules of the game, if you will, for access to all this money are becoming clearer. The investments now are being made in the downstream, but if all you're doing is building battery plants and you don't have the suppliers here on shore, you haven't achieved the onshoring objectives, neither commercially or strategically from a sort of a China geopolitical perspective. So that's the backdrop. So, but our strategy is not pinned just on hope. We've got a lot going on kind of behind the scenes. As I said, there's some government programs and some private interests that want to see this happen. We've been operating our refinery for a year now as a demonstration base for recycling. So basically, as we're building out the bigger plant, the legacy piece was recommissioned and it did operate. So people are seeing that Electra's team, while we're small and we took it on the chin this year. I'm an investor. It's been hard, but I think we've got a lot of people in our corner that want it to happen. And we do have I don't know if I can call it a coalition of the willing, but a coalition of the interested that are working very actively on a daily basis to get a funding package in place.
Well, from my perspective, we always hear all this talk about how Canada can play an important role in the future of electric vehicles with all the mining opportunities that exist and all the materials we're going to need. But you don't really see a lot of companies focusing on specifically refining like you guys are. I know we can maybe talk about NASDAQ from a few years ago, who raised tremendous amounts of money and effectively incinerated it. But it feels like this is what you guys are doing is something that needs to be successful. I understand that every situation is specific and specific things can go wrong, but we need to see some companies that are trying to do exactly what you guys are doing in order for the big picture to actually line up.
Yeah, look, and our asset base is multiples of our current market cap, right? And so the overhang that we have, besides a necessary end of year dilutive financing in August, it's the credibility factor or the overhang on cost to complete. Like, are you guys going to make it? And I think the quicker I can demonstrate that, the quicker we're going to have that re-rate, because our business model, this is not novel technology, right? Hydrometallurgy consists of bringing material in, leaching, doing your impurity removals, and then crystallizing a final product. China's been doing it for over a decade. We've got people with hydromet experience within our company from Glencore and Vale and Sherritt. And again, it's not a broadly held skill set in North America, but we've got the team. So technology is not an issue. We don't have to worry about permits and community and indigenous engagement. That's already been done. The plant's been operated, the equipment's on site. We need to fund this and get ourselves into production. We've already sold our production as well. And so when you start looking at the risk factors, it's, can these guys get it funded, and can they ramp it up the full production nameplate capacity within a reasonable amount of time? So look, I look forward to the challenge. It's 23 is a year I and our shareholders want to forget, but to me this is a year to get vindicated for the strategy and to come back, because the need is there now.
Can you give us any sort of breakdown of what the commercial agreement with LG Energy looks like in terms of a high level for investors that kind of want to understand that?
That's great. Thank you for that for that prompt, because the important thing with our facility is we don't want to take market exposure. We want to be like a widget factory, right? Where it's a very predictable margin. Be boring, right? Day in, day out, you're making X amount of money, call it, $2 a pound cobalt produced. And then you apply a multiple of that, depending where they're trading at that particular point in the cycle, whether it's 6 times, 12 times. And then you got a very steady state producer, and you make money through, yes, performance and ultimately dividends, and by sort of growing your footprint. And so the way we've laid out our agreement with LG, it's all in quotation periods, right? What's the reference point for the cobalt input, and what's the reference price for the final product we're selling? And so as long as we are pricing both ends, the front and the back end of our plant at the same time, then the cobalt prevailing price, whether it's $12 or $45, we don't care. So we structured it effectively where we get a margin. There's CPI adjustments. We've got a couple of reagents that we're particularly sensitive to. And so we've got an understanding that if things ever got out of whack there, we've got adjustments. We do have a little bit of upside in a very strong market where we can reward our shareholders. But the way the contract is structured, we really are producing units for them, and we're getting a very predictable rate of return, provided, of course, we're operating as we've represented we would, recoveries and efficiencies and operating costs.
Okay, I also want to sneak in a question about the battery recycling you guys are doing with the lithium-ion batteries. My understanding is you guys take apart lithium-ion batteries, and you're kind of left with this sort of black-looking mixture of stuff, and you guys are recycling that into something that can be used in future batteries. Could you talk about that a little?
Yeah, it looks like bags of fertilizer coming into the plant.
Okay.
There's 2 steps to recycling. The first step, which is much easier, cheaper, I guess, to set up, is the battery shredding. And so you see that a lot in the US. Li-Cycle's been doing it for years. You got Ascend Elements, you've got a whole bunch of private companies in the US. And basically you're taking, 5 years ago, it would have been old laptops and cell phones, but you're taking the batteries, and you're crushing those batteries down. So you're recovering the plastics and the aluminum and foil around the battery itself. And yeah, this black mass is the term of art, not a great name, but we call it black mass. A lot of that's the carbon, the graphite, because there's a lot of graphite in a battery. It's basically the residual material from recycling a battery, which includes a little bit of copper, but it's lithium, nickel, cobalt are the three big payables, with your graphite. What have I forgotten now? And your manganese. And so we bring that into our plant. And so you've got a lot of the shredders out there. We've kind of skipped that step. We can come back to it. The technology, the machinery is fairly conventional now, a couple of different ways of doing it. But the refining end is the prize, because right now when you crush a battery and you're left with black mass, most of that's going to Asia because there are no hydrometallurgical refineries. So this past period, 2023, we spent the entire year running a plant scale demonstration of our technology. Now, this is where IP does come in. How we leach, how we recover, the reagents that we're using to favor certain elements at different stages. And we've successfully produced a lithium carbonate product and a mixed nickel and cobalt product. It's kind of your main payables. And where it gets interesting is there's some big ambitious projects happening in the US, and they want to do it all on a campus, do the shredding, do the refining, but not just stop at refining, then do the precursor manufacturing, the cathode, and do everything in kind of one big step. I mean, the Chinese aren't even there yet. So it is technologically and riskier, more capital intensive. Our ambition, and maybe it's the classic conservative Canadians, let's just take the black mass, let's extract the minerals and sell it and make a margin. And that latter part of the supply chain, we'll wait for the market to get there. But our business model really is prove that you can do it and then partner with the battery makers to take in their scrap. Because there's a big future in black mass once all these battery plants are up and running, because there is a surprising amount of scrap that comes out of a battery plant.
And you guys are currently doing this sort of on a pilot basis?
Yeah, we did it for 12 months. We're winding it down now. I think given what we've learned, now we need to step back and say, okay, engineering studies, right? What are the vessel sizes that we need based on where we've landed with our process and our reagents and the flow of materials that we see from one end of the plant to the other? I'll take lithium as a case in point. Our plant historically did produce nickel and cobalt, different end products for a different market at a different era, but it never did take in lithium. So we had a small little evaporator. We knew it would be the bottleneck of our demonstration plant. So we need to go away and do some engineering around that. So we the plant's not shut down, but we slowed down the demo. Now we'll do the engineering. In reality, if the funding comes through as I think it will, then that'll get kind of backburnered for a little while we get the cobalt plant up and running, because there are a lot of people vying for battery recycling market share for a market that's not yet ready for prime time. Nobody's doing cobalt. So we'll go cobalt first, bigger, more certain margins, and black mass will be there for us as the market grows.
Trent, thanks for hopping on here today. I wish you guys the best of luck. I think that this is a story that the Canadian junior markets need to have be successful. And I'll be watching your story, and hopefully you can come back on here in the future as we get some more positive developments and you guys execute on your strategy.
Thank you. I would love to come back. I think we'll make you look good here in a few months, Steve, if all goes well. So thank you.
Awesome. Thanks, Trent. All right, everyone. Thank you for watching. If you enjoyed this interview, please smash that like button, subscribe, and ring that notification bell. Also, let me know what you think in the comment section. Thanks, everyone.